All right, again, good morning. This is Forex day by day. What we do in this channel, we track the market day by day, and then at the end of the week, we do analyzing for the next week. Okay, what we're gonna look at now is what the gold is doing and what can we expect for the next week. All right, today is Sunday, uh, January 18, 2026. All right, let's see what gold is doing. Very hot trading gold. All right. As you can see in our system, we measure the high and low of the monthly chart, which is this one. All right. To do that, we use a standard deviation channel at 0 degree, which is a decent measure of the movement. In here, we see the gold bouncing around. As you probably aware, there is a lot of issues with the gold, and according to JP Morgan, they say that gold will reach 5,000. I don't know if that's going to happen next week. According to what I see a reversal at this point. Most likely, it's going to do a pullback somewhere around the middle of the band, and then I believe it's going to bounce up again and reassess this powerful trend, as you can see. All right. So the first thing we're going to do is uh, let's take a relevant impulse like this one, and we're going to project our Fibonacci expansion to see if this corresponds to that in here. The reason I do that because you can do it in advance. This was this October 21. Finish somewhere about October 28. So we have a nice inspo to the downside and then reassess the trend to the upside. So let's do that. We use Fibonacci expansion. We use Fibonacci all the time. Why? Because it works. All right? Simple as that, people. Over and over, we see this phenomenon here. This space here between 1.31 and 1.618 Fibonacci expansion is one of the strongest levels that you can see. And we can see that we drew this month in advance. All right. And this is exactly what it is in here. As we can see, the price pretty much stopped there. And I can see it from here. I'm going to get a little close to do a market structure analysis. I can see it weakening to the downside. Will it continue to this point? I don't know. I just reading what I see. All right. And what I see is the movement coming down. All right. So at first view, we can see that our price is in a critical resistance zone. Now we also use gang square 9. If you look at my videos, I show you where to get this. Well, I don't have to show you where. You just go Godzilla Pro. This what it does is it give you points that are absolutely amazing of support and resistance. All right, my entire system is based in find these points of support and resistance. I don't mess around in the middle of the trend. All right, I wait for the price to expand or contract to areas of support and resistance, and these points, people, are freaking amazing. We're gonna see it now. Over here tells me you can see this shaded area. These are the strongest points of support and resistance across the board in anything. It tell you the day. In some cases, it tell you the hour, but I don't want to go that far. I want to work with the context on one day is good enough for me because I'm setting up swing trades. Okay, so I see that D15 fall in a 0 degree. You see, it goes from here 0 degree. You see the protractor here, and you can measure the angles. Go back to here 180 degrees and so forth and so on. So according to Gann, these points are very relevant. Also, he attached an element of a planetary alignment. For example, here we see that it's a new moon. New moon is falling in a 45 degrees. This is a massive area of support and resistance. Now, we don't want to take that because of this calculation. We're going to look at it. And let me tell you something, people. I've done about 50 trades. This is blowing my mind. This is blowing my mind unbelievably. And we're going to see it, all right? As you can see, all these areas I use it in this month, December, January. And we had from the 15 to the 19, we have a zone of support or resistance. So what are we looking at here? This is a resistance. What is the date? So we're seeing that this thing is not a joke. All right. 13. Let's bring it 15. 00. I use 1 day. It's good enough for me. Boom. Are you kidding me? Are you freaking kidding me? How is it that this is a different calculation? I just draw Fibonacci here. These lines are 30 days high and low. And look at my line here. How this guy knew this? Oop, that's not it. Let me bring it back up. What? Let's see 19, which is Monday. Now, Monday is going to be funny because we have in America Martin Luther King Day. So the volatility is going to be different. But nevertheless, the analysis is still good. Let's put 19 here. I don't know what I did there. Let me do it. January 19, 00. This is amazing, people. Does that means this movement ain't going to happen? No. We just read in the market, look at the past, project it to the future. That's the only thing we can do. All right. So we can see that this area is very relevant or resistant. Okay. We can rationally believe that this market could go down, especially now with all the nonsense going on with the gold. Let me take a sip of coffee here. They're asking banks to forget about the gold contracts and got real gold. Because like always, these people are messing with the market and we pay the consequence, okay? So there is a possibility that this market move down next week, all right? I don't know how I got at that with this movement. And I'm here waiting for this to reversal. And then all of a sudden, shoom, I go like, holy mackerel. Because I do swing trades, but at this point, the psychology thing, I kind of panic a little bit. Let me take this move before it start moving up again. So I got out here somewhere. All right. It blows my mind every time it works. Okay. So I am expecting to see a movement to the downside, and the projected stop will be somewhere down here. Could it be here? Yes. Could it be here? Yes. But according to what I read here, this will be my main target. Okay. Can you use this as a target? Hell yeah, that's a lot of pips. If you enter somewhere in here, that's about 500 pips. Why not? All right. Okay. What else can we see? I use two type of channels. I use a standard deviation, which is the one you're seeing right now. Now, a standard deviation normally goes 1 degree of inclination. So I decided to use 0 degree of inclination because it gives me the space I need. This is the space. Can you see it? So we have a space and time vertical. The elements of gang square root 9 are present right here. All right. And the way you see this, let me do it. I use gang square root 9. I'm going to project it, show period separator, into this chart here. There is an instrument in NT5 and NT4 that I cannot find in any other platform. All the other platforms are concentrating in the 1 minute. You cannot open. I had 25. I want you to look at this. I had 25 charts here. You cannot do that in any other platform. They tell you 3, 2, 1. Okay. In here, I generate my signal. I had a portfolio of 20. You cannot run a portfolio in a bullshit platform than the New Jacks have. That's to play. That's the casino part of the equation. When you're getting serious, you have to have a portfolio, a massive portfolio, rocking 24 hours a day. Well, what do you think? JP Morgan stop during the weekend, close their position and get the hell out of here, man. All right? That's not the vision. This is what I've been sold in the internet, that you can buy your Ferrari in 2 weeks, and then in the 1 minute chart, you can do this scalping. That's bullshit, man. All right? This is real trading. All right? So nevertheless, let's use this Gantt grid here. I commonly use 1 day. Why? Because that's the time period I like. Can you use more? Like 1, 2, 3, 5 days? Let's say, let me see, 1, 2, 3, 4, 5 days. That's a week. Now, space, you can see it right here. Time and space get together when these 2 elements get in place, and that creates some zone of support and resistance that are insane in the brain. Okay, let's leave it 5 days to see this giant square, and you find a point of relevance like this point down here, so you can have it for long periods in your chart. You set them up here. If you want to learn how to do that, look at my videos, and there is one that I explain this. Okay, and you can see that you cannot make this shit up, people. Look at this resisting area here. The whole resisting is this diamond. Okay, can you see this diamond? It's a 5-day diamond. This area of resisting is insane. As you can see, time correspond here, 5-day time. 5-day time. Look at the Gantt square night, but this is daily. Okay, but you can tell right here, this thing is stopped dead right there. All right, so it's very good to see. Well, let me take these lines in the background. No, let me leave it because I'm gonna put it 1 day. I use 1 day for a very simple concept. Any piece of metal that is short is way stronger than a piece of metal that is long. It bends more, all right? And with that visualization, I say, I'm going to work daily. Gantt work daily, okay? So 5 days, I can put it to play with it. But in reality, this is what I use. Let me bring it up here so I can see it. This is 1 day. Now, watch these diamonds. Oh, mama. Now, I set this up. I give it more granular. I give you everyday support and resistance, all right? Now, I set them up in here. Boom. Look at this. Now, this looks crazy from this angle, but if you click it a couple of times and adjust the graphic here for the purpose to identify this area. Oh, this up here is too far. Let me get a little closer. Going. Okay, there we go. This happened because this is too far to the left. This point is too far. Let me go small again because the graphic distort. Let me take the same point. Oh, project it here. It's more or less the same here. So now I have more square left over so I can manipulate the screen here a little bit. Okay, what do we see? We see an area dead right there in that resistance, dead here, and there is a space and time, a space and time, a space and time, and we can see the price bouncing off this area. Okay, let me. I don't know if now I'm gonna erase the background because so many lines in here. Okay, you can actually see people. You can make this shit up. Look, resisting here, resisting here, resisting here. This is a giant diamond. You see it right here within the small diamond. So you had this here, and two more. So you got more granular. As you get close to this expansion, you can see you know it's gonna bounce somewhere. Look in here, it bounced right away. But in here, you can see the price messing around within the context of these squares in here. Then you have the calculation of GANs and tell you from this point to this point, this is the strongest area according to GAN calculation. You can actually see the price responding, which we're gonna see right now. Let me get into a blank blank state. You can actually see the price structure collapsing here. So what we use, market structure. Can you see it? This is my highest point. I like to use straight lines. This is my high point. Control. This is my low point. When up, did not cross this line. It formed a new high here. Right? This is 1 hour chart. This takes forever to form. If you don't have any patience, do something else. Sell mangoes, open a thing to sell fried food, because you have to have patience in order to trade properly. Or you go to the 5 minutes and get killed in there, all right? So there we go. So now here, this was some sort of news here. Okay? Establish a new low. Now, this is no longer my low. This is my new low. And this is my high. All right? This is what the market is. You can actually see the price impulse retracement. Impulse retracement. Not going beyond this point, which tell me the market is weakening here. All right? This is what I read. Independently of any indicator, I can see the actual price action happening. Put a trend line here. All right. So we see that the market is clicking in there. Then let me use my standard deviation short channel here. How many candles are in here? 1, 2, 3, 4, 5, 6, 7, 8. Let me just do it. Sometimes I do this because it gives me a nice angle here. And it's gonna correspond to a Fibonacci number. This is too many. Let's say 144. Still too high. Maybe 55 candles. I'm just trying to match the standard deviation. Oh my God, right there. Look at how beautiful that is. 55. Fibonacci number. So we can see the inclination here. That's the whole point of this game. In here. Oh, wait a minute. Right there. We actually see the market weakening. So what I believe, according to the, well, let me do one more thing. So we see that the actual price is weakening as bounce from this Fibonacci area. Now, let's look at also another channel, which is the polynomial channel. What does that mean? A polynomial channel is a standard deviation channel, but it's not set up at 1 degree. Let me show you. For example, standard deviation channel inclination is 1 degree. Let's just put it in here. This is 1 month channel. You see it? It takes forever for this to move and capture a small movement, all right? It's very stable. This is what I use normally. I use 1 month and 1 month in the back. I use 0 degree, 1 degree, and 3 degree to get to the final conclusion. All right. I don't show that because the analysis will be forever, but this is more or less what I do because it picked up points like this one. Nice trade. Okay. Right now we see that it's in there, but it's not reaching the upper channel, but it's reaching this area that we already identify as a relevant area or resistance. Okay, this is the standard deviation, 1 degree. The polynomial channel, in the other hand, you can change the angle of approach of this thing and get very close to the price. And we're going to see that in here. If this is, what is it, 720, depending on the volatility, let me see. We can adjust this to normally respond to half of that. And then 1 week. Let's start small. No, let's see, 720. No, 360 because 720 is in the background. You see that? Channel with a standard deviation 1.6. 360 degrees. And instead to use 0, we're going to use 3 degrees inclination. Any doubts? You see how close this get to the price? This is super relevant. Let's say you identify the movement is going to the upside. You don't want to buy high, you're going to buy low. You wait for this channel to touch this. Now you already know this is moving to the upside. This is a pullback. You can measure it. Impulse retracement. Here, didn't cross here. Boom, buy. That's a massive trade right there. So now we see the projection. This indicator tells me that if everything remained the same and we don't have some crap going on during the weekend, this moving projection is to the downside. How far? To the middle of the channel. Base it in the evidence that is presented to me. I can tell you, the gold, US dollar, it is high probability that this movement come on down next week. Will it happen? I don't know. But this is what I see. So whatever system you have on entrance here, you can expect to sell the gold at this point or around this area. Let's wait what happened this weekend. See if it, normally this is what happened. Normally this is what happened. The price jump. All right. The price jump and then readjust into the trend. Or because it's so dramatic, the change that is happening, this must just, this probably just come back down this way. I also use standard deviation 3.6 because I don't believe in one line. I believe in a space is most likely. Let me put it on so you can see what I'm talking about. What was it? Oh, 720. 720 or 360? Forgot. Let me see. 360, yeah. We had 360 standard deviation, 3.6, which is the larger expansion. All right. Did I put 0? It's 3 degrees. Boom. Now I have a band here, which I believe easier than this specific type of line. And we can actually see that it's responding to this. This area is a relevant area or resistance. Okay. Again, my conclusion for the goal next week is going down. All right, guys. I hope you have enjoyed this analysis. The next one is silver. Very similar, almost identical. And we're gonna do it on the next video. Please subscribe and give me a like so I can grow my channel faster in 2026. See you guys around. Bye.